Good afternoon, good morning, and good evening, everyone. This is Joseph Trevisani from Worldwide Markets. Our topic today is the final half of the year, or as I like to call it, the second half of the currency year, which begins in September, in my opinion, where everyone tries to either make up or preserve what they've made or not made the beginning 9 months of the year, beginning 8 months of the year. This has kind of been traditional in foreign exchange as everybody goes on vacation and then starts over with lots of vim, vigor, and hopefully volatility. The session today, I'm going to go over some of the fundamental reviews of the currencies that we mentioned, the five majors. Most of you are probably aware of these things, but as far as the future goes, we'll take a look. Then I'm going to go over some of the world economic and political situation that offers a lot of both threats, encouragement, if you will, for volatility, and perhaps threats for other things. And then we'll take a look at some, if we have enough time, some of the brief technical aspects of what we're looking at in the currencies. One reason I'm going to put less emphasis on the technical aspect today is because the trends that we're dealing with now are pretty well established and have been current since the beginning of the summer and are in fact becoming more lively and more pronounced. But before we deal with any of these topics, I want to talk a little bit about the chart you're looking at here. Although not, this is our particular trading system, the Alpha system, the Alpha Trader. Also, I'd like to encourage anyone who has any questions, comments, criticisms, jokes, if they will, although no long monologues, just type them into chat, and I will do my best to answer them for you as they come up. This is something we haven't seen in some time. You know, we've had many complaints. I don't mean here at at Worldwide Markets, but in general, I've written them myself, and others have commented. Where's the volatility? Do we have a market change? Has something happened because of the web, because of the internet, because of quantitative easing, because of permanent low interest rates almost everywhere around the world? Has something happened to drain volatility from the FX markets? And without volatility, there is no FX market. We are back to trading currencies by mail, as someone once told me that they did early in their career. It's a long time ago. I've always maintained that this particular bout of low volatility is exactly that. Well, I thank you for that. I think it isn't so much that I was a sterling bear at the beginning of the summer, but have been a dollar bull for most of the year, and the dollar has been underperforming, shall we say. But in my analysis, the fundamental aspects, especially post-May, when the Fed started first making their comments about ending quantitative easing. Actually, that was where are we now? We're now in April. Yeah, when they first started making their comments about that it always seemed to me that the dollar would catch up, or the fundamentals in the market, we'll put it like the market would catch up with the fundamentals. And that seems to be largely what's happened here. But we'll talk about that in a minute, but I do thank you for that. An enormous, sorry, let me start over again. The volatility, the low volatility that we've seen, has troubled many people. It has troubled me because this is my profession, and not only that, I love markets, and I actually like to watch them trade and trade in them myself. But without volatility, you have nothing. To use a very antiquated Latin phrase, it is the sine qua non for currency markets and for markets in general. That means without that, nothing. Without volatility, there is nothing in any market. You can't trade. You can only invest. Now, when I sat for a number of years running the Tokyo shift for Credit Suisse, I saw many months of volatility at this level or lower where nothing happened every day, and nothing happened every day for day after day after day after month after month after month. So it's not a unusual situation. It is a bit unusual, I think, to have seen it in the major trading markets, Europe and Asia, Europe and New York, down to 40 points a day for days on end. However, all good things must end, and all bad things must end. So what we have seen in the past week, and this is something I want to talk about for a little bit, and then we'll go on to the topic here, because I know everybody wants to hear what I think about, some people might actually be interested in what I think about the currency markets going forward. Two events over the past week have kicked volatility, if not into high gear, well into the mid-range. That, of course, was the ECB surprise last week, and I believe the weekend poll on the Scottish independent vote. Now, the ECB surprised everybody by cutting rates and by saying they're going to start an ABS purchase program, cutting all three rates, actually. So now they have a real negative. They've actually gone deeper into negative rates. So we got a big move in the euro, of course, and lots of attendant moves in all the various currencies around the world. That was due to ECB surprise. But the ECB surprise is contained within the normal parameters, the normal paradigm, if you will, of currency analysis. Every once in a while, the central banks will surprise us, but it's a policy move in the euro. Policy move that surprised everybody with the attendant adjustment in rates. What's going on in Scotland is a far more import to the currency markets, I think, than almost anything else that's happening right now. And I think it's a surprise. It certainly is a surprise to me. It's a very interesting situation in that the ruling party in Britain, the Conservatives, allied with the Liberal Democrats, but primarily the Conservatives, David Cameron is a Conservative Prime Minister, have not been campaigning against the dissolution of the UK, of the Union, which is, I think, 307 years old, in Scotland, because the Conservative Party has no power base in Scotland whatsoever. All of the Parliament's representatives from Scotland, except for one in the UK Parliament, are Labour, from the Labour Party, from the opposition party, Edward Miliband's party. So the government campaign in Scotland against independence, the independence vote. And the shocker was up until quite recently, there have been a number of debates. A man named Alistair Darling, who I'm not really aware of, he's a former Minister of the Exchequer, which is Treasury, in Britain under a Labour government, so I guess it would be under Gordon Brown's government, or maybe Tony Blair's government, has been apparently losing debates to Alex Salmond, who I don't know much about, on whether or not Scotland should be independent. Scotland was independent for 1,000 years, more or less. This vote, so the poll that came in on the weekend was, I think, 51% for independence. And it isn't so much 51%, although that's important enough. It's that there seems to have been, this is one poll, but there seems to have been a huge shift towards independence, which would be very unusual, because in most elections, it is the incumbent or the incumbent position which generally gathers in the undecided votes as the election nears. It's one reason it's so hard to unseat incumbents. Human beings being, I suppose, inherently conservative, I don't mean politically, I mean in not seeking change unless it is very dire, or at least their tendency is to stick with the routine. I know I had to explain to my girls who had their 6th birthday yesterday what the word routine means. And I think that's true of politics as well, and choices in politics as well. So if this poll is correct, and there is something like a 10-point shift to independence, and that is the direction that the undecided are going, this is an earth-shaking event, and I will also talk about why I think that's the case. So, what has been, to my mind, one of the biggest surprises of the past 5 years? And all of the unemployment, lack of income, and everything else that the euro has forced upon a number of the countries in Europe, well, the non-German countries, frankly. We're all going to talk about the status of some of these briefly in a minute. One of the big surprises to me, but not really once I started thinking about it, had been the almost uniform lack of interest of anyone, including the Greeks or the Portuguese or the Italians, of leaving the euro. I know I had a long discussion with a friend of mine yesterday. He is a German. He's now an American, but he is German by birth and by upbringing. He's been here about 25 years, I think. And so we met out in the street, and we were just talking for a while about why is the euro still together? And the primary reason is lack of alternative. You might say lack of example, but lack of alternative. So if we take those two things, there's not much. The alternative is worse, or it appears to be worse. What do the Greeks do? Go back to the drachma, the Italians back to the lira, and all of the attendant problems, not just problems, but basically catastrophes of debt and ownership and how to pay off the debt of a dissolution of the euro, of an abandonment of the euro by particular countries. So you have that, which hasn't changed. That remains. Greeks leave the euro, they really have to figure out what to do and how do they pay off all those debts, and on and on and on. Because the drachma, if recreated, would immediately devalue, and instead of, just as an example, 8 to the euro, you might have 20 to the euro. Makes it very hard to pay off your debt. So that hasn't changed. But the other example, or the other reason, I think, has been the lack of example. And this is where the Scottish vote becomes, I do think, very profound. There has been, at least in Europe for the past 70 years, since the Second World War, since the two horrible wars of the 20th century, because the second is just, or as what was it Marshal Foch said after Versailles, the Versailles Treaty, this is not a peace treaty, this is a truce for 20 years. And he was exactly right about that. Almost to the day, to the year. At any rate, there has been a profound movement in Europe to unity. It has been unstoppable. It's supported by all of the elites. It's basically supported by the European population. Yes, I will be glad to deal. Let me talk about that in a second. Let me just finish my thought on this, and I will be glad to support about. I'm glad to talk about that. I don't want to dwell on this topic too much, but I think this topic, and new, because I was surprised as well. I've been assuming all along that yes, it might get a little closer, it might be a little nervous, but the Scottish independence movement will falter, much as the Quebecois separatist movement faltered, as the I won't say because I have friends in Barcelona, so I'm not sure exactly where the separatist movement is in Catalonia, but it does not appear at least to be on the Nuria, if I'm wrong on this, you can correct me. It does not appear to be, it's not on the ballot. It's not an active movement, although there seems to be a good deal of talk about it. So most at least the three that I've mentioned, this is the first one that's actually come up for a vote. And looks to possibly succeed. So this potential, and the British, the English, and the Scots are European peoples. If the Scottish vote to separate from Britain, then one, you have an example of the resurgence of nationalism, and in Scotland, it is without enormous economic grievances. Scottish, I'm not a expert. I'm not even aware of the arguments for Scottish independence, but they do not seem to me to be largely economic in nature. If, put it this way, the arguments for Greek separation from the euro, for Italian, for French, maybe not so much, for Spanish, for Portuguese, are profoundly economic. And they're not simply the economic type of argument which says we're having a bad time now, but the future will be better. They are a permanent installation of the new European Euro system. That system denies cultural differences across the EMU. It denies nations and their cultures the ability to adapt as they see fit. It forces them into an economic imitation of the very effective and efficient German economy. And that is a question which is addressed if there is success in the Scottish independent vote. As I said, there are two issues with separation from the euro. One is efficiency. It would be an incredibly costly and difficult thing to do. Two is example. And if there is, nobody wants to say first, certainly the Greeks are not going to. They haven't. I've been very surprised. I thought they'd buy it. If the Scottish choose this, it's my view that the idea of separation from the euro, I do not mean the EU, although the EU is going to take a huge knock if this goes through. But certainly initially, separation from the euro, where you can combine both economic reality, as in it's not working for the Greeks or the Italians, or largely for the French, or the Portuguese, or the Spanish, or the Catalonians. It's not working. And there doesn't seem to be any sense that it will work. If the United States unemployment is somewhere around 12%, and that is my view of the real real unemployment in the United States, in Europe it's 20 or 25%. What kind of future do you have for your population, your people, your young people, if your unemployment rate is that? There is both an economic reason and a very, very real economic reason. Greece is never going to turn into Germany. France is not going to turn. The Germans are the Germans. I know this leads to unfortunate cultural assumptions. Let's not make those right now. That's a topic I would do in a sociology class, and even nowadays you certainly couldn't talk about. You can't talk about cultures anymore as if they have values, but of course they do. But that aside, I apologize for that. It's one of my favorite topics. Um, so this Scottish vote has brought us back to ground, back to earth, back to the currency markets. It has brought us this. So we have and now that this vote is on everybody's mind, it had not been on everybody's mind because the polls before this were Union leading. I think by about 10 points at the last poll. Cameron's not talking about it. Suddenly, we have this enormously, potentially, that's two adverbs in a row. You should never do that. This enormous increase in volatility due to a potential political event. Okay, now, let me take this question right here, because I think it's on topic here. Oh, we have a couple of questions here. Let me do these for a second. Okay. That is true. The European, many of the countries, the euro is essentially a French and a German creation, as is much of the concept and force behind the European Union to begin with. It was a Frenchman who I think first came up with the idea, although after something like that had probably always been around, sort of an intellectual thought process. The advent of the euro has made what was a largely benign union into an extremely difficult road, an economic road, for many of the countries. This is an interesting comment. I think everyone should read this. What one of the participants, I'm not sure his name, has said here. The issue we have with this, or at least the issue you can have with Europe, is that the elites in Europe, the political leaders, the thought leaders, by and large, not all of them, and there are more anti-euro, and I think the British are probably ecstatic that they never ever joined the euro, are for unification. There seems to be a remarkable uniformity of opinion amongst politicians, not Marie Le Pen perhaps, Marine Le Pen I think her name is, not Marie, but among most others, that the euro, that this is an unstoppable movement that they all support. It is no doubt true that it would be a very difficult transition. I think it is probably going to be far less difficult were a country to leave the euro than people imagine. But in the long run, the largest grouping that people have allegiance to, although the Europeans, the European bureaucrats, and the internationalists don't like this, it is still true, are national groupings. I would say that whatever the loyalties to the European idea are, in Portugal, their loyalties are to Portugal before. I would think the French are the same. I think the Germans are the same. I think there is a limitation to, and I know I'm getting a little philosophical on this, so I'm going to move on to our primary topic here in a minute. The largest grouping that human beings seem to be capable of actual emotional loyalty to, the majority of people, is a nation state. When you get beyond that, the degree of loyalty plummets. Brussels has no loyalty from the largest group, from the vast majority of Europeans. Lisbon may for Portuguese. Paris does, may for the French. Berlin now for Germany. Rome. Athens. With differing degrees, these are the entities to which people owe their emotional unity. None of them is headquartered in Brussels. And so there is, I think, the biggest change we will see if the Scottish vote goes through is exactly what this comment, which I think is a very astute comment from 14718 Loveld Kane, to all participants, I thank you, has pointed out. The long-term potential for countries to control their own destiny, their own economic destiny, is something which will begin to be discussed. Yes, it would be very difficult, as is pointed out. There would also be, I think, an enormous amount of, maybe not enormous, but a large amount of pride in one's country to have taken the more difficult, but in the long term, more promising road. From what we have seen so far, in more than a decade of unification from the euro, it has not produced the type of economic convergence that its founders had hoped for. It has forced austerity, and it has forced an alien cultural value, if you will, on much of Europe. Okay, so let us stop on that. But I never get to stop on one thing. The remaining question is, of course, volatility. And I think we have seen a not surprising return to volatility and a not surprising set of events. Surprising in the fact that, yes, we didn't expect them, but not surprising in the fact that they came because events such as these always come. And when they come, they return volatility to the markets. As the next 2 weeks progress, and as we get more polls about Scottish independence, the ramifications of this vote, not just in the UK, but across Europe and to the hitherto unstoppable movement towards unification, will start to play out across the European Union and across the European Monetary Union. If this vote succeeds, if Scotland votes to leave the UK, the ramifications, I think, are profound for Europe, and they should be excellent for volatility. Okay, enough on that topic. I'm sorry to take up half an hour with that, but I thought that this is simply not, because it's so recent and it's not getting really a lot of play. Yes, there are a lot of articles about it, but no one seems to have, I think I'm going to write my column on this week. No one seems to have said very much about the potential for this to change views and to create volatility. Okay, enough on that. So our review here for the second half of the year, as I like to call the last 4 months, or really the last 3 months minus one of the year, the penultimate quarter. Actually, that's not quite right. September, October, November. Those 3 months have always been the second half of the currency year. December you can never count because there's so little liquidity, and to coin a very bad analogy, but I'm going to use it anyway, what happens in December stays in December. Oh, I should cringe at that, but anyway. If you have looked over the history of trading in December in the past couple of years, and actually you can go back as many years as you want, you will see that the movements in December are almost always immediately reversed in January. Hence my comment that what happens in December in the currency markets stays in December. Okay. On to the fundamental changes, or at least as was pointed out earlier, what really has happened, I think, since about May, and I think this is, let me just check where that is. This is the sterling. So sterling's big move, when was this date here? Let me just put that up here. Okay, so this is right here. This is our charting system. So really the end of June for the change in the direction of the sterling. It happened a little earlier, back in May, if I remember, for the euro. But what we've seen here is a reversion to the economic mean, if you will. Most indicators, as you all know, are simply various ways of measuring reversion to the mean or distance from the mean. That's exactly what is happening here in the currency markets. And this goes for the euro, for the sterling, less so for Japan, Australia, and Canada. I'm going to talk about those each in sequence. And I'm going to get through them all so we can take a look at some of the other stuff here. I know that if... anyway, let's go. The European economy has turned moribund. It was always close to it. Its impediments are far greater than the United States, although the impediments in the United States, regulatory and otherwise, have increased tremendously over the past 5 years. Had a long discussion with a friend of mine who owns a moderately large business here in New York, and we just talked about this for a couple hours last night, actually, about the difficulties that have been increasing for his business due to various government programs and other things we just had to deal with, and how he's trying to prepare for them, and how hiring people and other things to take care of government mandates is hardly a productive endeavor. At any rate, despite that, the historical difference, and I could go through specific statistics, but we just chew up a lot of time talking about items here, and what I'll do is I'm going to show some of the GDP numbers just as an overall. But the historical difference between the European economies and the United States economies and the United States economy has, despite all changes, reasserted itself. The Europeans are stagnating, the U.S. is not. Now, is the U.S. growing anywhere near what it was? No, everybody has come down. Instead of the U.S. growing 5% for a few quarters or whatever, it's now growing 2%. It looks very much like that 4% in the second quarter was an anomaly, and will end up at 2% for the year, which for the U.S. is very poor. Europeans are flirting with Italy's in recession again. Who else? The Greeks have not left recession yet, I don't believe. So on and on and on. The European economies, even Germany, I believe, had a negative quarter. They may end up in recession again. The European economies have stagnated completely, and they're at a puzzle as to why. It's not because the euro is too high. That helps on the margins. I think that the ability of the European economies to adapt has been strangled by the euro, because each of those countries adapts to economic adversity in different ways, in ways that are appropriate to its own national state and to its own culture. And they can no longer do that. Yes, what would the Greeks do? They would devalue the drachma. That's what the Portuguese would do with the escudo. That's right. But that actually, historically, even if you don't approve of it, for some larger reason, it works for those countries. It may be the best adaptation for that particular country with that particular culture. That is possible as well. There's too much temptation here for me to delve into one of my favorite topics, as I said, the cultural differences in Europe and around the world. The Germans have recycled some of those surpluses. After all, they have funded a number of the rescue programs that have gone across the EU, so it's not quite fair to say that they are not creating demand. But if you want to take one aside on this, there are two ways of looking at the supply-demand equation in the world economy. And one is that there's not enough demand. But the other way to look at it is there's too much supply. And the two are not necessarily exclusive. The Keynesian school will say there's not enough demand. What do? We pump up demand. How do we do pump up demand? We pump up demand with deficit spending. Okay. The other side is that everyone who is a developing nation, it is far easier to build a factory, to create, you can do it in 2 years or 1 year, whatever it is, with government money. It's far easier to build that factory and create demand than it is to create a middle class to buy the goods. That takes time. It takes change in attitude. It takes a long period of employment. So many countries have been creating supply without the attendant demand. After all, each particular family, let's take the family unit, can only buy or need so many cars. So how do you create more demand for autos? You get more families involved. But that takes time. My parents, as an example, lived through the Depression. They never bought stocks. Never. There was a roaring stock market in the 80s. Roaring. They never touched it. And they were also very, very circumspect in their consumption because they had lived through the Depression. That's the kind of attitude. That's the kind of change you need to create demand. So it's a much more difficult thing to do than simply building a factory. What's happening now, and it's been happening certainly since China and Deng Xiaoping, but more so in the past 15 or 20 years, has been an enormous increase in supply. If you want to know where some of the deflationary pressures come from, this is where. Okay, let me move on and try and stick to, but I really do appreciate the comments. I take it as a great compliment that people will be engaged enough to listen, attend first, listen second, and 3, actually think about what I'm saying or about any topics in general, and put the comments up for everyone's edification. So I thank you very much. Okay, so what we have it here, largely, certainly with the euro, has been a reversion to the mean on economic growth. It has taken time for the U.S. statistics and the U.S. to make this obvious. Now, for a while, at the end of last year, let's say the second half of last year, it looked very much like the Europeans were cruising along reasonably well for them, the U.S. a little bit slower. But again, we have reverted to the standard, not standard, but the historical difference in process in economic growth in the Europe and the United States. So that, and the realization of that as depicted in both the economic statistics coming out of the United States and coming out of Europe, and I'm not going to go through the specific ones. You all knew they are, what they are. But more so, it's been actually highlighted by the rhetoric of the European Central Bank, not by the rhetoric of the Fed, but by the Fed's actions. The Fed has stopped quantitative easing. They stopped it or began talking about it more than a year ago in May 2013. It's going to end next month. It's going to probably end on my birthday next month or something like that. Whenever that meeting is, I don't know. That speaks volumes. The Fed's policy is changing. It's been changing for a year. It took the markets a while to catch up. This is not surprising. I've spoken many times about that rate increase that the ECB did in the summer of 2008, so I'm not going to go into it again. You've probably all heard it, probably more than once perhaps. The euro, let's put up a euro here. Okay, this is the sterling. Let's open up a euro chart and take a view at that as well. Euro USD. Whoa. You gotta love this. When I was on a trading desk, Credit Suisse, I used to call the FX market in my grandiose and rather pretentious way the fifth horseman of the apocalypse. It's certainly not. There were four horsemen in the traditional vision of the apocalypse, and I don't remember what they are. Okay, so let's take a look at this. Let's do a historic on this. Take this out to today, and then take this to... We're going to go back to last January. Okay? Here's the Euro chart for that. Okay? So you can see that the Euro move down started back, I think this is April. Let me put this up here. It gives you the recording. This peak here at 92. It was actually early May. I was right. It was May. A little bit before a month and a half before the sterling started to move. So again, what we're seeing in the euro has been a reversion to the mean on economic differences. There is a caveat to this, of course. What you would expect traditionally when in its standard history, when the Fed starts tightening. I know they're not tightening, but I'm sorry, the removal of quantitative easing is tightening. Is that the rates in the U.S. have not gone up. In fact, if you look at a 10-year chart, I have it here, but I don't think I'm going to put it up at the moment. Rates have actually come off from that top at 3. Well, let's look at it here. Come on, we bring the charts here. Let's take a look at them. Okay, does that mean that we're not up? No, it's the old one. The last time I did a webinar here, we had this on wireless, and we now have it on a landline, and it works much better. Okay, so this is the U.S. 10-year, which I always use as the indicative rate for the U.S. economy, although for currencies, the 2 years is probably more appropriate. Since January, it has been coming down. So you are looking at sort of an anomaly in what is going on in rates, but it's really not. It's quite explainable. The Fed may be planning sooner than later rather than raising rates. But no one really believes that they're going to do that anytime soon. They certainly have not indicated that the Fed funds is going to become a target. All they keep talking about is going to stay low forever. Okay, well, maybe it will. We'll all stay young forever, too, and that'll be great, including Janet Yellen. We're all going to get younger as long as the Fed keeps rates. It's the Fed's rate garden of elixir, or garden of youth. It's going to keep us all young forever. Okay, maybe not. But there has been a lot going on in the world for the past year, which at the very least has kept the pressure on treasuries, has kept treasuries in demand. Don't forget, Argentina is basically defaulting on its debt. Wars in the Ukraine. Rather difficult situation in the Middle East. A war between Hamas and the Israelis. So on and on and on. There's no shortage of the safe haven trade. In addition, something which doesn't get a lot of coverage but is absolutely true, the Chinese started devaluing the Yuan again. Well, how do you think they did that? They probably bought a lot of treasuries. In fact, if you look at the treasury report that comes out, the Chinese are buying huge amounts of treasuries. Well, if they buy them, that sends the price up and the rates down. So all of those things are involved more than any appreciation of the U.S. because it doesn't make any sense. The U.S. economy is getting stronger, rates are getting lower. What did I miss? Not the traditional relationship, but we are in a post-traditional economic environment, just like art is postmodern, or maybe it's postmodern. I mean, when does it actually go back to whatever? Go back to being modern? We are in a post-traditional associative time in economics, in central bank rate policy, in economic and how it affects the economies, and in their relation to currencies, at least through the interest rate cycle which we're looking at here. Okay, so now let us go back to the euro. So for the euro, this I think is a trend which continues well through the second half of the year that I'm calling these 3 months. The Europeans have just cut rates. They're going to start an ABS program. They haven't even started it yet. Is this going to make a lot of difference to the European economy? In my opinion, absolutely not. But as keys for trends and trading, you're looking at it. Let's move on to the UK. The UK had been one of the best performing, I believe the best performing economy in Europe. It is a part of Europe. That has changed recently. And in my mind, one of the reasons it has changed, where do you think the British do all their trading? They don't send the stuff to Sri Lanka. Their stuff goes to Europe, by and large. If the Europeans are stagnating yet again, I haven't touched on my other favorite topic, is what's the effect of declining populations on economies. I'm not even going to tempt myself. I'm not going to do it. So for the British economy, what's going on is that their economic future is tied across the channel, or what do the French call it? La Manche. La Manche. They don't call it the English Channel. And so you've seen a series of relatively weakening statistics coming out of Britain, and that is responsible for this. And that also is a trend that is going to continue through the second half of the year, these 3 months. What I have been talking about for most of the year, as far as currencies go, is the inherent strength or the likelihood of a strengthening dollar, simply because the fundamentals that we've been dealing with will eventually reassert and will eventually have their impact on the currency markets, and that we've seen so far. Okay, let us move now to the yen, which is a horse of a different color. That is not a metaphor that works in this case. All right, well, at least it's a different currency anyway. Okay, here we go. Here's the yen. Let me put this up. And the yen has some differences and some similarities with what we have seen with the other currencies. I mean, the general theme here for the second half of the year is dollar strength. The reasons I'm going over both generally but also specifically. Okay, let's turn this into the daily. Put up the historic. Okay, let's take this back past Mr. Shinzo Abe's campaign for the prime ministership, which he now holds. Okay, there we go. Dollar yen. Okay, where were we down here? Ooh, back in the 90s. Let's take this a little further. I do remember my days on the Tokyo, trading the Tokyo market. Man, I was, anyway, let us not reminisce here. We're all young. Okay, here we go. Okay, so let's look at it this way. Now, Mr. Abe begins talking somewhere around here about his policies if he wins election. We get the yen up to here. This is what we have seen since, where are we here? Maybe we take it here, but let's take it up right here. Okay, this is last November. It's almost a year ago. Almost a year we've been trading between 106 and about 101. Is that what this is right here? Yes, 101.50. Okay? So, this is the period of asking for proof for Mr. Abe's policies. Yes, he succeeded in devaluing the yen. You could say that the performance of the Japanese economy over the past 15 years should have already devalued the yen, but it didn't. Why it didn't is another topic. It's another topic that I like a great deal because it gives you an insight as to how markets work when the fundamentals take such a long time to reassert themselves. In fact, these are not fundamentals. This is Abe saying, I'm going to print money until the yen gets devalued. So the yen is devalued. But now it's not going up. The dollar yen is not going up because of Mr. Abe's policies. I spoke at the last webinar I gave for ourselves, for WWM here, for Worldwide Markets, about the currency impact of Mr. Abe's policies. And also the sort of standard trope that you hear often in the market from economists and others that Japanese debt doesn't matter because it's all held by the Japanese. I suppose that means it can't default? Well, technically, yes. It's just like the U.S. You just print more yen and then you don't default. You print more yen to give people back their when their bonds come due and you don't have any problem. But that's not true. And that's correct. It does create a bubble in the Nikkei, just like there's a bubble, in my opinion, in the U.S. stock market. The Japanese just put in a tax increase to help them with their budgets. Why? Because the debt limit, the extended debt in the Japanese economy is over twice as large as the economy, 200% of the economy. And they are trying to get some gain on that to prevent that from getting even worse. So, an economy that's largely stagnating, that has a declining population, that does not have the world-beating export industries that it did have. I mean, when was the last time there was a great new innovative product out of Japan? I can't think of one. Maybe the last one was the Walkman. That's a long time ago already. The first Walkman I had played cassettes. That's a long time ago. So it does have an effect. Now, it's probably not the best time in Japanese economic history to be raising taxes, and they know that. Yet they did it anyway because of this debt problem. So this period here has been one of waiting for the Japanese economic policies of Mr. Abe to have effect. And they really have not. But down here, we have, again, the general trend of this conversation is the return of fundamentals, if you will. I could have called it that. I didn't. For the dollar. This is a positive dollar move. This, through here, is a negative yen move. Okay, now let's take a look at the Aussie. Whoops, come back over here. Sorry about that. The Aussie is also a slightly different character. Not tremendously, but enough so that it's certainly worth talking about. Remember, the factors in Europe, the UK, and Japan are national, but in the current situation, they are largely, we've returned to dollar-based because the things are changing for the better, or at least comparatively. It doesn't mean they won't falter here in the United States. After all, the United States does not live in a bubble either. Okay, let's fix this for the current. Here we go. And we'll take this back. I'd actually like to take this back about 15 years, but that's going to make too small a chart. Only because the Aussie has, we're going to take it back a little further than the other ones. Let's take it back one more month. 2 more months. Okay, this is 2 years now. Okay. What we're seeing in the Aussie are changes, some related to the dollar and some related to its position as raw material supplier for East Asia, for China primarily, but also for India. This historic point, this value for the Aussie at a point above par for the U.S. dollar is a historical, it was up until that point a historical oddity. The Aussie had never been that valuable. What has happened? And I think you are going to see a permanently higher range for the Aussie against the dollar because of the strength of the Aussie economy inherent due to its position vis-a-vis China. The Australian economy has not had a recession in 23 years. I don't think anybody else can say that except maybe China. Is there a relation there? Of course there is. And so the Aussie has become, and the Australian economy has become a permanently more valuable entity. And its currency has become permanently more valuable because of Chinese growth, the Chinese economy, and Australia's position vis-a-vis that. So, this is the difference we have here. We have both. This is where are we? Okay, this is this year. This primarily was worries about China, about emerging markets. Not a small bit of profit taking there as well. Here, we have a bit of recovery on that, and since then we have sort of countervailing forces in the Australian dollar. We have strengthening U.S. economy. We have returning eventually, but at least that's where we're looking, U.S. interest rates. We have the standard U.S. advantage over Europe and for the past 20 years over Japan as well. But we also have, all of those would tend to support the dollar against the Australian dollar. But we have now, certainly the past 15 years, more so the past 10 years, the strengths of the Chinese economy, the inherent growth potential of the Chinese economy. I mean, one of the issues with, probably the primary issue with the Chinese economy right now is its export orientation. As I mentioned earlier, it's easy to build factories. It is much more difficult to build a consumptive middle class. It is much more difficult. It takes much more time. It basically is a generational item to create the kind of consumer economy you have in the United States, and in Europe, and in Japan, and other places as well. That is a much harder and longer task. It is what the Chinese have said they will do, said that what they want to do. It's also the safest road for the Chinese economy. But at the moment, the Chinese seem willing to keep their economy humming by whatever degree, by whatever factor, whatever means is necessary. We had a very interesting discussion on Thursday night with a woman who's written a number of books about China. She is Chinese, and I wanted, at some point in the conversation, I really wanted to ask her, and she speaks in China with, at the invitation of various Chinese organizations. I think she teaches at NYU here in the city, or across the river in the city. We're in New Jersey. And I wanted to ask her very much, but I forgot in the course of our conversation. It was kind of a distracted night for me. Whether or not, in her view, the government in Beijing is just the latest imperial dynasty to rule China, with the same concerns, the same worries, and the same fears of the Chinese masses as historically served to replace dynasties in Beijing or in Shan, wherever the capital is at the time. But I went on to a different topic. But that seems to be the role that the Chinese are playing. So this role, as long as the Chinese are willing to do that, and I'm not sure that they have a great deal of choice, it is going to keep the Aussie strong. So although we're looking at, in the euro, the UK, and the yen, an increasing dollar value against those currencies, you're going to find a much more restrained picture in the Aussie. So in my mind, the potential for the Aussie to move is much less. This is the big potential, and we've seen it. Now, the euro has had good potential, but the euro has, I think, plenty of more room to move. The dollar yen, I think, has plenty of more room to move, as does the sterling. The sterling probably, at this point, depending on what happens with the vote, and don't forget, buy the rumor and sell the fact. There will be other polls in the next 2 weeks related. I'm going to have to end here because I know we've been on for an hour. I did not get to the dollar Canada. I apologize for anyone here who is a fan of dollar Canada. It did seem in my thinking about preparing this webinar that the vote in Scotland needed to be discussed, and that it has very great implications for the currency markets and for the European project in general. So I think that if you're looking for continuation here, if you're looking for the movement, the trend movement in the next 3 months, in the second half of the year, we have, I think, only one direction to go. And even if you see weaker statistics out of the United States, which is quite possible, although it doesn't seem like you're going to get them, it is quite possible, certainly based on the housing market, which is nowhere near as strong as people pretend it is. The variable will still be the differential between the United States and Europe. And remember, even though the Fed I'll put it this way, no one is talking yet in any realistic terms about a timetable for the Fed to start increasing rates. That still has to happen. And whenever it does, with whatever tentativeness Ms. Yellen broaches this topic, the dollar will get a renewed burst of vigor because it is following, although slowly, the standard comparative, the standard and traditional role of central banks in determining, and their interest rates cycles, in determining the values of currencies. Okay, folks, I thank you all very much for attending. Once again, I am always flattered that people take the time out of their day, wherever it is around the world, to sign up and then to actually come and listen. And I appreciate very much your attention to what I have to say. I will put my email address in the chat, and if anyone has any comments, criticisms, or jokes that they'd like to share and I can use the next time, please type them in there. And I will certainly respond to any of your comments that I hear from. Again, I'd like to thank the people at FX Street for the opportunity to put this on. And everyone have a great day. Thank you very much for coming. Bye-bye.